Well, the fashionable response has indeed been to say we need more controls, more regulation, more government spending, and that'll solve it. Now, the people calling for this have basically been calling the shots in economic policy around the world, and certainly in the United States, for over 70 years already. Why have they still not gotten it right that in 2012 they can tell us we just need a little more oversight, we just need some more regulations? If they haven't fixed it yet, what possible reason would who could possibly be so doltish as to think that suddenly they've figured it out? These people have no idea what causes these crises. And in fact, in the United States, we did not have some kind of deregulation. I mean, there was some deregulation, but it had nothing to do with the crisis. The deregulation we had in the US allowed for interstate branch banking, allowed for interest rates on savings accounts to fluctuate up and down. That has nothing to do with the crisis. Where it really counts, there was no deregulation. To the contrary, there are, on the state and federal level in the United States, 115 institutions aimed at financial regulation. And I'm supposed to believe that if only we had had 116, then there would be no crisis. I mean, the very proposition is absurd. Moreover, the regulations themselves have contributed to the intensity of the crisis. You have the Basel rules in Europe that were implicitly adopted in the United States that tried to do a risk weighting of assets when banks purchase assets. And they said that when a bank holds $100 in traditional loans, it needs to hold $10 in reserve. When it holds $100 in mortgage loans, it needs to hold only $5 in reserve. But when it holds $100 in AAA rated mortgage-backed securities, then it needs to hold only $2 in reserve. Well, I think we can all do the math and figure out what asset every bank wanted to be invested in. Well, when that asset turned out to be rotten, the problem was because of the regulations, everybody is clustered into this asset. Instead of the assets that banks invest in being diversified over a series of asset classes, everybody's in this one, thanks in large part to the regulation. So, moreover, there is this sense that regulators are some kind of superhuman species. These are far-seeing people. They can see things that you and I can't see. We're too stupid and blinkered to see what they can see. But in reality, most of these regulators, let's face it, in the United States, most regulators are the people who went to business school and they graduated at the bottom of their class and they have no prospects, so they become a federal regulator. The kid who graduates number 5 in his class does not say, I hope I can work at the Securities and Exchange Commission. No one, it never even occurs to them. So you have the dimmest of the dim overseeing the sharpest of the sharp. It's just, if you are resting confidence in your system on that arrangement, it's no system at all. So to the contrary, what we need is a system that doesn't rely on the wisdom of regulators, because these regulators, they didn't see the crisis coming either. None of them saw. 99% of them said that everything was fine, there was nothing wrong, that lending standards were as robust as ever. The Federal Reserve Chairman, Alan Greenspan, and his successor, Ben Bernanke, said the same thing. Everything's fine, take out adjustable rate mortgages, there is no housing bubble. If these people with PhDs and tenure at universities, in Bernanke's case, if they can't see it, why am I supposed to believe that one more regulatory apparatus will see what they don't see? Leave it to the market. Let there be real punishments, market-based punishments for error, number one. No bailouts, but punishments for error. And number two, if you want to know what's causing these financial bubbles to be inflated, well, why don't you look at the guy with the air pump? I mean, look at the when the Federal Reserve or the central bank creates these financial bubbles, it is too late to regulate your way out of them. The train has left the station already. There's no use crying over spilt milk, is the American expression. So the more regulation explanation just does not hold water. The additional spending thing, well, let's just spend ourselves into oblivion and this will solve our problems. Because once we are through the crisis, then we'll cut back on the spending. They never do, almost never, or they cut the rate of growth of spending, or they cut the spending mildly, but the spending never gets cut to before the stimulus levels. It's always ratcheted up higher. And in the United States, we have numerous examples of severe budget cuts being followed by dramatic expansions of the economy. So after 1920-21, there was double-digit unemployment in the United States. And what did the U.S. government do? Well, they actually cut the budget in half. Federal budget was cut in half. People today would be screaming about how terrible this is. We're all going to fall into a black hole and never be seen again. The United States had the greatest expansion it had ever seen, practically, or one of the greatest, in the years that followed that. Or after World War II. Alvin Hansen was the greatest American student of John Maynard Keynes, and he predicted in 1943 that there would be an unemployment catastrophe after World War II because we would stop spending money on the army and the military and all that. But to the contrary, what we had was 1946 was the single greatest year for the private economy in all of U.S. history. A 30% increase in production in 1 year. The exact opposite of what we're told. And there is your great, if you want an empirical test, there's your great test. There's the vast bulk of Keynesians were predicting disaster if you cut. But the free market people were saying, no, no, this isn't going to happen. The economy will adjust. If you just leave it alone, it will adjust, and indeed it did. So it turns out that, as usual, the real solution is the exact opposite. Whatever you read in the newspaper, if you do the exact opposite, you'll be in much better shape. So to the contrary, what we in fact need is much less spending so that resources can go back into the sector of the economy where they're not spent arbitrarily. Government budgets tend to be fairly arbitrary. I mean, let's not be fifth grade children about this. I mean, most government agencies are just fiefdoms that seek more power and higher budgets. That's what they are. They're not aimed at pursuing the common good, and these wonderful people sacrifice themselves for our well-being. No, they want new carpeting, they want a nicer building, they want more power, but they couch this in the claim that by getting new carpeting for my office, I'm stimulating the economy. It amazes me there's anyone who could believe this when it's so obviously self-interested. So no, we need the private sector to have more funds so that they can rebuild what the government has destroyed through years and years of bad policy. Basically, everything that would horrify a bureaucrat in any European capital would be where I would begin.